We didn't.
All of them work, but I'm only turning on the DGIs.
Oh, so right now it's. Did you switch it there?
Yeah.
Oh, I can hear.
Yeah.
So right now it's.
No,
did you switch? You didn't switch this.
I'm using the DGI.
You didn't put it on DJI.
Oh, this is not. Oh, you want both?
No, right now it's not DJI.
So this is plugged into this.
Oh. Minutes. I got another meeting. All right, the video is not working.
Yes, video is not
Oh, we're
working.
back. No, it's working.
So it's working on. No, it's not. I'm not sure actually.
All right, guys. As I was saying before, for those of you that are watching live, this is a tax strategy Q&A, but today is January 15th. It should be good, the video now, right?
Yes.
Today is January 15th, and you're probably thinking, wow, I have to file my taxes. What retroactive strategies can I use for 2025? So if you're that business owner that haven't done any tax planning in 2025, and now that the year is over, you're thinking, hey, what kind of retroactive tax strategies can I use? So today I'm going to give you, I think, 3 of them. And additionally, I'll take any questions while I'm speaking and giving you the retroactive tax strategies for 2025. Make sure you use the comment section or wherever you're watching. You could be watching on YouTube, right? We're live on Facebook.
We should be live on Facebook.
Listen, you're at work. Can you get off your cell phone?
My
at work,
job
at work, we
entitles
cannot
me.
be on a cell phone. Your job entitles you?
The scope of my job
Oh my God.
allows me to be on my phone while I'm at work.
Whatever. How many of you work with your spouse? Let me know in the chat. Okay, so guys, use the chat. So we are live on Facebook. We're live on, we should be live on Instagram. I don't know. These two over here, which is our video guys, Satra and Mariana, couldn't get the Instagram working, I think. It took them 20 minutes to get the video up and running. So we know what kind of a great job you're doing, Mariana. But anyway, and you, Satra. But anyways, use the chat wherever you are. Ask me tax questions, and let's talk about retroactive tax strategies. So one of the retroactive tax strategies you can do if you own real estate. Excuse me. So if you're a business owner and you're renting to yourself, I'm talking about you own real estate, right? So let's kind of do this, right? So you've got, I'm going to put it in a circle, S corporation, and I'm going to put in a triangle your real estate entity. And you are renting to yourself, right? So your S corporation is paying rent on a monthly basis to your real estate that you own either 100% yourself or you own it with a spouse. Okay, under the economics rule, it counts for this tax strategy that I'm about to tell you. So what happens is that you can do self-rental strategy. What does that mean, self-rental strategy? I am self-renting, Boris, right? So if you have losses from your real estate from doing cost segregation and doing depreciation, for example, those losses generally are not tax deductible. The reason they're not tax deductible because they're passive, and if you have active income, it will not be deductible against your active income unless you are renting to yourself. Then these losses actually can be deducted against your S corporation net profit on your personal tax return. What you need to do, by the way, this applies for 2025. So if you have some losses in 2025 from your real estate self-rental, or you want to do accelerated depreciation using cost segregation, guess what? Even if the year is over, you can still go back and do it. What IRS tells you is that you can group these transactions. You can group your S corporation and your real estate under Section 469 on your tax return, you have to attach a statement, and your accountant should know this. If you don't have a tax advisor that's doing all of this for you, I'm telling you, you're probably overpaying in taxes, okay? So, retroactive tax strategy number one, if you own real estate in which you have your business and you rent from yourself, okay, then you can use self-rental tax strategy. That's the first one that I'd like you to know. The second retroactive tax strategy that we can talk about, how many of you still with me? Let me know in the chat, wherever you are, just put it in the chat.
Can you
Let me
drop a
know
thumbs
that,
up?
Boris, we hear you, thumbs up, we like this strategy, we don't like this strategy, Boris, or
I'm using this strategy.
or I'm using this strategy, or you don't know what you're saying, whatever, just say something in the chat, because I'm like losing my voice over here. All right, just let me know that I'm not alone, okay? Let me know, I'm kidding. Okay, so the second tax strategy that, oh, why is this not erasing? Okay, the second retroactive tax strategy, one of the biggest mistakes that I have seen that the business owners are making, okay, one of the biggest mistakes that I've seen is that they're not taking QBI deduction, okay? QBI deduction is 20%. Now, a lot of you probably have watched enough of my content and you said, Boris, we know QBI, but there's still some business owners that miss out on this. It's literally check the box deduction, okay? It's literally check the box deduction. But accountants, for the life of me, I don't know, for some reason they miss this deduction or they misqualify the business and they erroneously qualify them as what's called SSTB, which is Specified Service Trader Business. Now, what is a Specified Service Trader Business? Now, yours truly, right? Accountants, we got attorneys, and we have doctors, and we have certain consultants. Now, doesn't mean all consultants, okay? So I'm not going to get into that. But if you're just a consultant who's doing coaching consulting, you are not an SSTB, so you're okay. So what happens is that when you make over a threshold amount, which is like 400,000 and change, if you're married, filing jointly with the phase-out amounts, what happens is that you don't get an SSTB. So you don't get a QBI, and accountants check off the box that you may be an SSTB, and you may be losing out this 20% deduction. Generally speaking, to keep the calculations very, very simple, the deduction for QBI is the net profit of your business times 20%. So if your business made a net profit of $800,000 times 20%, who can tell me math on that? Honestly, I would wait for you to tell me the answer, but I think we have like a 30-second delay with the whole live streaming. So the answer is $160,000 in tax deductions. We've done this. We've amended returns in the past for clients, and since right now 2025 is over, you haven't filed your business and personal taxes, check on your last year's return. It would be, I believe, if I'm not mistaken, I think it's line 10 on your Form 1040. So like if you take a look at line 10 of Form 1040, you may have a QBI. If you don't have a QBI, could be for two reasons, okay? And this is really, really important. I'm sorry I'm getting a little bit technical for you. I know it's not your job to be an accountant, but it's just important for you to know to question your accountant. There's two reasons why your accountant might have not claimed your QBI deduction, okay? Reason number one, they just didn't, right? Forgot, didn't check the box, right? Simple reason, right? And it's fixable. Number two, they did take a QBI, but this QBI deduction was offset by 1 or 2 or 3 real estate properties that you own. Now, unfortunately, most of the tax softwares, if they see you have a real estate losses and you're not a real estate professional, for example, those real estate losses counted to offset the QBI income, which is detrimental to you. So you actually have to opt out and say, hey, this doesn't qualify to me. Unfortunately, most of the tax softwares do this automatically, and accountants don't pay attention to it. One of the first things we do in our tax advisory, for our tax advisory clients is like, we review this entire thing. Because if we see QBI on the right schedule, I think that it's a 8895 or 8995, don't quote me on the form schedule. If we see it, I'm like, wait a second, we see the QBI, but it's not being deducted. Why? It's most likely because right here. So again, this is retroactive strategy number 2. Are we getting any yes, Boris? I can hear you.
So
I don't like this.
I have questions. So if I still have losses on my rental property, I can still deduct that from profit. Did I get that correct?
Losses. So somebody's asking question on the real estate, I think, right?
Yeah, on the
I don't
real
think I saved that. Okay, I will come back to that question. So let's talk about the third retroactive tax strategy. What was the third retroactive tax strategy I want to tell people? I got it. Okay, cool. Okay. So let's say you did not take any retirement deduction last year. Can you still take retirement deduction? The answer is yes. Okay. Two types of retirement. So I'm going to split it into two, right? No employees and yes employees. Okay. By the way, can I get a yes? We can see this. Everything is good. Everything is so far so good. Great. We'll love it, Boris. Let me know in the chat if anybody's saying, nice things for the change. Okay.
Well, we're
I don't know why I just did it in a Russian accent. What's that? For the change.
We're getting hand waves. We're getting hellos.
By the way, how many of you are not subscribed to my YouTube channel? Let me know in the chat. All right. So there's two types of retirement accounts. You can still do for 2025. Number one, if you have no employees, regardless of what type of a business you have, partnership, LLC, single member LLC, or an S corporation, you can still do a SEP IRA. Okay? SEP IRA. So let's assume you are an S corporation, right? So let's just say you're not an S corporation for now. Okay? So let's just do you are not an S corporation. You're a single member LLC or a sole proprietor. You receive 1099 income. You basically take 20%. Okay, and you multiply it by your net profit. That is your maximum deduction. So let's say you made $100,000, 20%, $20,000 deduction. Can you still do it for 2025, even though the year is over and you're going to deposit the money today in 2026? The answer is yes. If you are an S corporation, right? So S corp, you take 25% and you multiply it by your W-2 actually in this case, okay? So if you paid yourself $100,000 from a W-2, your deduction would be 25% into the SEP IRA. But let's say you have employees and you didn't get a chance to set up a 401k. If I'm not mistaken, I think the deadline to set up 401k was October 31st, is October 31st of each year. I may be wrong, but I think that's the deadline, okay? You cannot retroactively go back set up a 401k. You cannot set up a solo 401k if you have no employees. SEP IRA would work. But what you can set up for yourself, one of the retirement accounts is called either cash balance plan or defined benefit plan, right? So either one of those, or they're like used interchangeably. And this is really, really cool. And it works very, 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 very well in terms of benefit over cost. If your employees, if you have like less than 10 or 15 employees, right? You can put away at least, and again, I'm just using the average number for all of our tax advisory clients. This number could be higher. It cannot be lower than this. At least it should not be. At least $200,000 into your retirement account with cash balance or defined benefit plan. So this is more of an advanced tax strategy. If you still have not done it for last year and we're in 2026 and you want to file tax for 2025, speak to your tax advisor. Be like, I watched a live with Boris and Boris said, okay? So this is one of those things. All right, so these are the three retroactive tax strategies that you can still use for 2025 in 2026. Mariana, we will take our attention to Mariana with any questions that she has.
Okay, my CPA put my salary as a CEO in other deductions line 26. Does it mean I am missing deductions for the corporation?
What? So we have a question. What's the name?
Lisa.
Lisa. Hello, Lisa. Okay. So Lisa says, my CPA put my salary, right? Her salary. So her CPA put a salary on line 20, what?
6.
Line 26. Lisa, I want to ask you, what form are you talking about? Are you talking about Schedule C? Or are you talking about S corporation or corporation return? Because S corporation, the owner's salary, the CEO salary would go on line 7. On the Schedule C, the owner does not get a salary. There's salaries and wages for other employees. So let me know what form are you talking about. Who's next? We're going to come back to this once you answer.
I have a question from Benjamin.
Yes, Benjamin.
Can an S Corp pay the owner, who is also the CEO and person bringing in sales, a 1099 for quarterly bonus, or must they receive quarterly K1 distributions only?
I love Benjamin's question, guys. We're going to break it down so everybody pay attention. Also want to let everybody know, I have like a major headache today. I'm still performing, okay? So I want to let you know. And Mariana, I have a major headache today, okay? So take it easy on me today, okay?
Let's go out.
Let's go. No, I ain't going on. No, I'm going to my bed. I'm going to sleep. Okay.
Can you fix the
Fix
board
what?
just a little bit?
Is this good?
Okay.
Well, maybe Satra can just fix his camera. He's the cameraman, not me. They make me do everything here. Okay. Benjamin. Okay, so Benjamin says, listen, Boris, I have an S corporation. Benjamin, can you let me know if you're currently getting paid a W-2 from the S corporation? He says, I have an S corporation. Should my S corporation issue me a 1099 for sales that I do? So I'm guessing you are an owner of your business, but you're also a sales rep of your own business, right? And you're making sales and you want to pay yourself commission. So Benjamin is asking, can I pay myself commission on a 1099 on a quarterly basis, or does an S corporation have to have a salary? Okay, so Benjamin, I'm going to assume that you are taking a W-2, okay, and I'm going to put regular, R for regular right here, but you're saying, hey, instead of adding this bonuses on a W-2, can I issue myself a 1099 from the S corporation? The answer, the simple answer, and the right answer is no, but I'm going to give it to you in a long way, okay? Number one, if you're doing this for yourself or for your other employees where you give them a W-2, but also giving them a 1099, you are eventually, there is a chance, I'm not saying you will for 100%, get a letter from the IRS and then be like, hey, this person is getting paid on a W-2 and a 1099 because we match the social security numbers. Why is that? Because you're not allowed to classify a W-2 employee as a 1099. So they're going to have to get paid.
He's receiving a W-2 fair salary.
Perfect. So I got it correct, right? So Benjamin, you're getting a W-2. So that's number one. You as an owner of an S corporation, same issue that I just explained with your employee, but you also cannot get paid 1099. You must pay yourself on a W-2. So the owner of an S corporation, again, does not get paid on a 1099. What happens if you do? Does IRS go bankrupt? Does that mean you're cheating the system? Technically, no, right? So I explained to you why I'm saying it. I'm not saying that you should pay yourself on a 1099 from an S corp, but the 1099 is subject to the same Social Security and Medicare taxes such as W-2. But if you take a 1099, then you would take expenses on the personal expenses and reducing this, which is you cannot do because you're getting paid from an S corporation. That's why just avoid paying yourself a 1099 from an S corporation. If you're paying yourself for commissions, for working for your own S corporation for sales, personally for my clients, Benjamin, I would absolutely not even put it in a W-2. What I would do is that I would make sure my client is getting paid reasonable compensation, RC, right? What is, let's say it's an $80,000 or $120,000 from an S corporation, and the commissions are just distributions, which will be reported then on a K-1. Remember, on the K-1 of your S corporation, you pay taxes on the net profit of the business. I hope this is clear.
So someone was, I'm not sure if you just answered it with your question, but with your response, but what
Aren't you supposed to be paying attention? What do you mean you're not sure?
What if they have another duty that they are working on 1099?
If they have another duty, right? So again, if you're working for your S corporation, you talk. Somebody asked a follow-up question.
Yeah.
I think they're asking about the employee section. If you have an employee that is getting paid on a W-2 and you gave them another job to do another duty, like you said, right? No, you still cannot pay them on a 1099. I hope that answers it. Believe me, you want to keep the unemployment department of your state, the employment department from the federal government off your backs, okay? Just believe me, follow this. Okay.
I have a ton of questions.
By the way, how do I look? Excellent.
By the way, if you want to...
Yeah, what should I tell her?
I got it. That was it.
Okay.
Lisa said she's a C Corp. I don't know if you want to revert
Okay,
back.
Lisa, I do want to revert back. I do have Lisa. So she's a C Corp. So Lisa, a C Corporation, if I'm not mistaken, I don't have the form in front of me, but also has the owner compensation on either line 7 or 8, very similar to S Corp. I don't know why your CEO salary would be on line 26. You may want to give me some more clarification on that. What else we got, Mariana?
I have a question from Allison.
Hello, Allison.
New SM LLC.
So single member LLC, Mariana, get the
got you,
lingo,
got you,
please.
got
How
you.
long have you been working in the tax?
Okay.
How many of you think I should continue keeping her here in the business? Please let me know. I'm kidding. We love Mariana. All right, let's go.
New single member LLC set up in 2025. Husband is the single member. Want to transfer all shares to the wife.
You wouldn't want a husband to be a single member, Allison. I'm kidding. Okay, so husband is single member.
Yeah, she wants to transfer all shares to the wife.
He wants to transfer. Oh, she wants to transfer to herself?
Want to transfer all shares to the wife as single member. Husband had health issues in 2025.
Ooh.
Oh, can you help me with the process?
Well, I can advise you on this live what you need to do, but definitely speak to your tax advisor. So when you're transferring assets from one husband to another, from one spouse to another spouse, right? From a wife to a husband. You guys, my camera guy went like this when I said it. It's okay.
Or husband.
So, excuse me. It's a non-taxable event, okay? Because it's from one spouse to another. You just want to speak to an attorney that deals with this, and they will transfer the shares. Your accountant, when they're filing the taxes, they will note the change on the tax return, and the change will be noted on those K-1s. I hope that answers the question. Okay, Mariana, let's go.
Okay. I have another question from Sammy.
Sammy, okay, hello, Sammy.
Does my reasonable salary need to be going up as my S corporation company increases, even if my role on it stays the same? Or can I still have the same salary just with more profit percentages?
To answer your question simply, Sammy, yes, you keep the profit, don't worry about it, as long as you're reasonable compensation, right, guys? So Sammy is asking, let's just kind of put it in a numbers perspective, right? Sammy, I'm just going to assume, unless you want to share your numbers with us. So Sammy is saying, you know, my first year, my business made $400,000 net profit. My salary was $80,000, okay? And now my business is making, let's say, $900,000. Do I still pay myself $80,000 in salary? So the simple answer is that most likely you can keep your salary the way it is if your responsibilities haven't changed, which you're saying they haven't. I could argue a little bit otherwise, right? What is it? What's the proper English term? The devil's advocate, right? Mm-hmm. Because I know what it's like to have a growing business, thank God, okay? And as the business grows, your responsibilities do change and they do grow. So what I would recommend is reassess your reasonable compensation every year, annually, right? So this is what we do for our clients here for our tax advisory. Like every year, we reassess their compensation. If their profit skyrocketed or went up, even went up, they're like, hey, we do look at that, and we have an internal tool that we use. I pay a lot of money for the software that actually asks the client, what do you do in the day-to-day? What's this responsibility, that responsibility, this responsibility, that responsibility? It gives a reasonable compensation. My tax advisors review it. If they agree with it or don't agree with it, sometimes we don't agree with the report spit out, just because on the extra information that we know from the client, and we do assess it annually. So to answer your question simply, if your responsibilities haven't changed, then yes, as long as you back it up. But look, realistically speaking, right, when your business does well and your profits increase, your responsibilities do increase as well. All right. By the way, we're giving away things over here. Anybody that asks questions, okay? What are we going to give for free today, Mariana? Can we give this book? By the way, guys, I am writing, and I should be finished with a brand new S Corporation Tax Secrets book. And for everybody that has bought this book in the past from us, I think we've sold...
Quite a lot.
Was it
Wow.
40,000 copies?
Over 40.
I think, don't quote us, right? We sold in the past few years. So everybody that has bought from us before, we have your emails in the system. We're going to email you a brand new copy for free. So if you already bought it, if you have not bought it, be on the lookout. It'll be S Corporation Tax Secrets with 2026 updates, and of course updates for the one big beautiful bill. With that being said, we are going to give away a few things.
I do have 2 more questions.
We're going to get to those questions. We're not going anywhere.
Okay, but
I still have like 10 more minutes here, okay? After 10 minutes, I'm clocking out because I'm not getting paid overtime.
Yes.
Okay? All right.
Don't allow it.
Guys, would you rather get mugs or would you rather get a free S Corporation Tax Secrets book? Let me know. And actually, I'm not going to send you this one if you win, because we're going to have a new one in like less than 45 days. We're going to send you a brand new for free S Corporation Tax Secrets. I'm anticipating it to be a lot of pages, very, very easy to understand. Tax strategies that you don't even need your accountant. Like literally, I'm just giving it all away. So, would you guys, who would like a free book? Who would like a free book?
Lisa says she wants a book with a signature of you or Mariana. Do not mind to buy it. Ooh.
Her signature, really, Lisa? My signature, I understand. I'm kidding. Who would love Mariana's signature? Okay, guys, the only way you can win a book if you ask questions, so we can keep this engaging, okay? I don't know why my camera guy is just going woo, woo, woo with the camera. We okay? Oh, you're showing the book. Okay.
Oh, we have people who want the book.
Yes, the book. Okay,
really?
cool.
You don't want a mug? I could get you a mug with your name on it.
No, it costs more money. No mugs. I'm kidding. All right, cool. Guys, ask questions and we're going to raffle off the winner, right? Are you writing people's names down?
I was not, but I can.
She's not always doing her job, guys. Please forgive her. Okay, let's go. Questions, Mariana.
Okay. I have
Do we know where we're live? Well, guys, if you can tell me, we have quite a few people on the live stream. Can you let us know in the chat where are you watching from? Because honestly speaking, we set up this entire system.
No, it didn't work.
We have no idea where it's streaming. So where is it streaming?
It didn't work.
So where is it streaming? Only on YouTube? Yeah. That's it?
Yeah.
Not Facebook, not Instagram? We paid so much money for this equipment.
I know. Next week.
Plus I paid this guy. I'm kidding. We love you. I pay you the most. By the way, you're supposed to make it work.
By the way, our video guy, he used to film. Can I say it? Okay, he used to film.
Mariana, the camera is over there, not on the laptop.
I don't like the camera, but he used to film on Desperate Housewives, and he has a sweater. Like I saw it yesterday.
Wait, you filmed Desperate Housewives?
Yeah.
You worked. All right, cool. That's what we hire, guys. We hire the best talent.
We hire the best.
Although there's no Desperate Housewives over here, guys. Okay. All right, let's go. We got questions.
I'm not a housewife.
Mariana, let's go.
Okay, total revenue.
Wow. You hear that comment? Woo! All right, let's go.
And it's okay. Total revenue over 300,000.
Who is this?
Karen.
Karen. How do you spell Karen? Karen?
Yes.
Okay.
Total revenue over 300K, 40K salary, single member LLC, converting to an S corporation. What should my salary really be?
So if your revenue is $300,000, Karen, then what is the profit on that? That's what I want to ask you. Okay, so let me know in the chat. We'll come back to you for sure. And then we can talk about what your salary should be. And you did say you are a single member LLC converting to an S corp. Okay, very nice. Let's go back to the next question. We'll come back to Karen when she gives us a follow-up answer.
Okay.
So is everybody saying they're watching on YouTube?
Yeah.
So it literally didn't work on Instagram and Facebook?
It's not.
All right. Okay.
It's okay.
Okay. So it's not okay, but okay. If you say it's okay.
Can you do self-rental strategy if you own a business and only own your primary residence?
No, don't do that. Don't do that, okay? So the question is about self-rental strategy. Self-rental, okay? So I erased what I had before. I don't know why I erased it, but let me see. Did I erase it? I think I did. That was a mistake. Yeah, that was a big mistake. Okay. So self-rental, we said if you have an S corporation, and you have a real estate that you own, which is a commercial real estate in which you're building, in which your business operates. The person is saying, who is it, by the way? There was a question, can my...
Carlhan's Amy.
Yeah, so rent, right? And the question is being asked, can my personal residence be used for the self-rental strategy? The answer is no. Just use accountable plan. Reimburse yourself. We have a video about an accountable plan on our YouTube channel, which I literally walk you through it of how to write off your home. And in the new S Corporation Tax Secrets book that I'm going to be releasing, guys, it's going to be there all laid out for free. Okay, let's go.
Question. I like the whiteboard. Book. Hello. Does the book come with a free consultation?
No, it does not. We sell tens of thousands of copies. Well, I shouldn't say tens. Well, tens, I guess, a year, right? We sell I'll tell you, we sell close to 1,000 copies a month. Am I correct? Yeah, about. So imagine 1,000 consultations. No, but book
But
is.
you can schedule.
No, you can't. Don't give people free hope, false hope. You can schedule a strategy session with our team to see what it looks like to work with you, but it's not a tax consultation, if that helps.
Correct.
Okay,
And if
cool.
you want to schedule a call, you can go to taxplanningcall.com.
Yes. And next time we're doing live, Sattar, we're going to have 2 cameras running without you juggling 2 cameras, right? We're going to switch, right? The guy that shot Desperate Housewives. Yeah, okay. So
Question from Johnny. Johnny 5J5 alive. Johnny alive. Is it smarter to pay yourself a much higher W-2 salary than it is to leave the money in the business and have it subject to K-1 taxes?
Johnny, great question. Very misunderstood situation, and you're not the only one, okay? So Johnny says, Boris, right now I pay myself a W-2. I'm just going to assume Johnny's numbers, okay? Johnny pays $120,000 W-2, and the profit for a business, I'm just, again, assuming Johnny's numbers, is $800,000. And he says, Boris, why do I want to pay only $120,000 on W-2 to myself? Why don't I just add entire $800,000 on a W-2? Why would I want to pay distribution tax, or what he referred to as the K-1 taxes? So, guys, there is no distribution tax. Just remember, write it down. There is no distribution tax. There is no K-1 tax, okay? I'll give you an example. So, Johnny, let's say, for example, your business made a profit of $920,000, right? You paid yourself $120,000 W-2, okay? And you're left, oh, excuse me, little mistake over here. 120,000, oh my God, sorry. 120,000, like that, W-2, and you're left with $800,000 profit, okay? Let's say out of that 800 that's sitting in the bank right now, before December 31st, you decided to withdraw $500,000. I don't know, living expenses, owner distribution, it's owner distributions, withdraw to buy something nice for your wife, like I do for Mariana sometimes, just take $500,000 out and buy her something nice.
I can't wait for my next gift.
You guys want to hear a funny story? My brother is proposing, right? My brother is proposing, and she's not going to be watching the live stream, right?
I don't know if you should say it.
Huh?
I don't know, not yet.
No? Okay, fine. Yeah, because the gal may be watching my stream. I don't know, never mind. Pretend like, can we take it off the live? All right. Anyways, Johnny, back to your question. I don't know how we got sidetracked. Okay, so
I'm getting a $500,000 present somewhere.
Oh, right,
I don't know,
right.
some island. I don't know.
Yeah. Okay, so Johnny, over here, you're left with $300,000 in the bank account, right? So let's pay attention to these 3 numbers. Very, very important 3 numbers, guys. 800,000 net profit, 500 distribution that's going to be reported on a K1. Don't get me wrong, and 300,000 net profit. What's going to be reported on a K1 are 2 things. The 800,000 net profit, I'm sorry, 300 is not net profit, I misspoke. 800,000 net profit, and number 2, 500,000 distribution. But you still have $300,000 left in the bank account, okay? Don't worry about this 300,000. This does not matter. On your K1, you're going to pay taxes on $800,000. That's it, regardless of how much you took in distributions, because this is your net profit. Coming back to your original question, if you add the $800,000 into your W-2, not only are you going to pay the same taxes that you would have paid on a $800,000, which is federal and state, you also will pay Social Security and Medicare taxes. So that's why S Corporation was created for small business owners, is not to overpay Social Security and Medicare taxes on that salary. Okay, maybe that's not the only reason why S Corporation was created, but that is one of the main advantages, okay? I hope this is clear. Let me know in the chat, Johnny, if this was clear. What else we got, Mariana?
I have a question. So we have 8 minutes.
What time is it?
3:52.
Oh, we don't have 8 minutes. We have 3 minutes because I have another live to get to. Okay.
So, so what do we want to do?
We'll take questions for the next 3 minutes.
Okay, I have a question from Brian. I am the owner of an LLC S Corporation company, currently with an SCP plan for employees.
Wait, I got sidetracked. Sorry, Brian?
I am the owner of an LLC.
By the way, guys, I'm going to step out of here in 3 minutes. We're going to leave Mariana on the live.
Oh, by
so
myself?
so you can pick the winner.
Okay.
People have to win.
Okay.
All right. Let's go. Okay, Brian, what does he say?
I am the owner of an LLC S Corporation company, currently with a SEP plan for employees. Would you recommend a different retirement plan?
Yes, Brian, yes. Just
to utilize reasonable compensation.
No, Brian, why would you do this? Okay, guys, so Brian says I have an S Corporation and I have a SEP IRA set up. SEP IRA works really, really well if you're a single business owner. If you have employees, right, and you said you have an S Corporation. So in a SEP IRA, you can put away 25% of your W-2. Right, W-2, I'm going to write owner. Oh, guys, pay attention to this. W-2 owner. But if you have employees, you also have to put away 25% to the employees. Okay? Like W-2 employees. And that could cost you a lot. If you've got payroll, equaling $300,000, for example, that's 25%. Okay, so that's $75,000 that you're going to be out of pocket. You may say, well, Boris, I'm getting a deduction. That's true. If you're in a 30% bracket, you're going to save yourself like $23,000, but you're still out of pocket $50,000. That is not a good way. I actually took a lot of business owners out of the SEP IRA, and I said, hey, instead of doing a SEP IRA, you can do a 401k where there is a 3% profit share. Not a profit share, match. 3% match, which protects you from doing 25%. Now, I know what you were asking. He was saying something about reasonable compensation, I think, right?
Mm-hmm.
Yeah, so forget the whole reasonable compensation. First thing, you want to be out of this. All right, guys, I do have to get out of here. Thank you all so much. We're going to do another live.
Yeah, Karen did respond with her
Okay, let's do follow-up. We promised Karen a follow-up. Where's Karen over here? Karen, yes, she had, what was her net profit?
Net profit is $130K. Karen, if you don't mind, if you're here, just retype your question one more time because I don't.
So profit is, I remember her question.
Oh, you remember her question?
Yeah, she said, what should my salary be?
He's that good.
Whatever she says, guys. Okay. She said, what should my reasonable compensation be? Oh, no, she said the profit is what?
$130K.
Oh, $130K, sorry. Profit is $130,000. So I don't know how you came up with $30,000, Karen, in your the salary that you pay yourself. So we use a software that will determine for our clients what their salary should be. Typically for our clients that are $130,000 profit based on the responsibilities that they do, again, I'm just using a typical number. I'm not saying that should be your number. It comes out to about anywhere between $60,000 to $80,000 in a reasonable compensation. This is a very big gap between $30,000 and $130,000. Unless you tell me, unless Karen, you're not working full-time in your business, and you could be working part-time. I've got plenty of business owners that have an S-Corp as a side gig. They make really high profits, but whatever, a lot of things are automated and they barely do any work, for example. In those situations, is it possible to pay yourself $30,000 while you make a very high net profit? Yes, as long as you can back it up. So
salary was $49K.
Okay, cool.
Or $40K.
I thought it was $30,000. I have it as a 30. Okay, guys, thank you all so much. I'm going to leave you with Mariana. We got 3 winners, right? You're going to pick out 3 winners?
We'll pick 3 winners.
Okay, guys, I'm going to leave you with Mariana. I do have to jump on another call. Thank you all so much. We're going to be doing this again next week, and hopefully these 2 will figure out how we can go live on Facebook or Instagram. Okay,
yes,
thank you.
Guys,
this was
I'm
amazing. Thank you so much. Satra, I appreciate you.
That we didn't answer. I'm so sorry about that, but please don't lose faith. Come back next week or wait for a short. Maybe we'll answer that question on a short. If you are not subscribed to the channel, please make sure to subscribe. We have a really, really amazing video that's going to be, I know, I keep looking over here. We have an amazing video that's going to be dropped tomorrow. Satra did an amazing job editing it. Please, so make sure that you're subscribed. And honestly, if you have a friend that is a business owner that could really benefit from these strategies, please share the link. Share, because we really want to reach as many business owners as we can, because Boris loves to share his knowledge and his wisdom. And please, yes, same time. It's going to be 3 o'clock, same time. We're going to try to log in on Facebook and everywhere else. Okay, so let me see. I have a
If you
sheet
can email me to me or my school.
with names.
I'm not sure if you can do that. So look.
Second. What I'm going to ask you to do, just bear with me, please. If you win, just send an email to boris.musheyev@borismtax.com. Odie, if you can just put that in the chat, but only if you win. We're giving away 3 books, so I have my wheel of names, and give me 1 second.
As long as I'm talking
If I turn this around, yeah. Give me 1 second. If I turn this around, can they see that? Put this down, and you're gonna get a copy of this book.
Okay.
Okay, are you ready? Can't see the comments, but I'm gonna spin. Calvin Zulik, you're getting a copy of this book. Just please, please, please reach out. Let me do 2 more. 1 more. Johnny 5 Alive. Reach out. Congratulations. So Calvin didn't get removed. Sorry about that, but we'll just spin again. A Roth 81. You also get a copy of the book, so make sure you reach out so we can get that sent out for you. Okay, thank you guys. See you again next week.